Hello and welcome back to All Things Money. I'm your host for the show, David Blain. Thank you for joining us today. In the previous segment, we were talking a little bit about market gurus and the media and some of the worst all-time calls ever. If you missed it, head over to our website, dlblain.com. There we'll post some archived copies of the show. But just real quickly, we talked about Irving Fisher, who was famously 3 days before the market crash in the 20s, predicted that markets would remain elevated. We had Joe Granville in the 80s. We had Robert Prechter of the Elliott wave theorists, also in the 80s and through the 90s. And then in 2000, the tech mania culminated with Henry Blodgett predicting that tech valuation would stay elevated. And we talked about New York Times study of why the media continues to push these folks forward, and it's simply because the media is there to sell airtime, just as we are. You know, we hope that you listen to our show, but the mainstream advice that's not radical just does not sell to as many viewers, and so they continually trot these people out. Now, I wanted to continue with this discussion a little bit and examine it a little bit more about maybe some of the motivation behind this and how to help you listen to people on TV, the media, and ascertain who you should listen to. And this, there's a guy by the name of Neil Kashkari who works for PIMCO, and I won't go into all the details of Neil, but Neil was at the epicenter of the TARP bailout several years ago and got out of government, now works at PIMCO, and he wrote a great article called Known Unknowns recently, and I'm going to borrow some of the analogies that he uses. The first one, we're talking about bold predictions. People love bold predictions that are eventually proven correct. You know, that's one of the reasons people go to fortune tellers and, you know, fortune cookies at the Chinese restaurant and things like that, is they love these random things, and they have enough grain of truth, and every so often one will be accurate enough that this sort of mystique continues on, and these people or these things are put up on a pedestal. And I thought I'd talk two examples that Neil came up with was in Joe Namath, who in 1969 was the quarterback of the New York Jets, and he guaranteed that they would beat the Colts to win the Super Bowl. And if you know anything about football back then, there was just no way anybody thought that they were going to win. And Namath successfully led his team to beat the Colts and, you know, became a legend. Another one from back in the 60s was President Kennedy, who boldly called for the nation to land a man on the moon and return him back to Earth safely by the end of the decade. And at the time he said that, we hadn't even orbited the Earth, let alone made it to the moon. And you know, today it takes almost a decade just to design a new rocket, so his call to action was certainly a very bold prediction. On the other hand, who remembers the name of people who were wrong? The example Neil uses here, what was the name of the pastor who predicted that the world would end on May 24th, 2011? If you remember that whole thing, I don't remember. And another one was in 2007, equity strategist Abby Joseph Cohen predicted the S&P would reach 1675 by the end of 2008, and of course we all know what happened in 2008. But nobody remembers these things, and you turn on the TV and there are these predictions that come out daily, and what I wanted to do was give a framework for analyzing these predictions. Two big factors. Number one is you have to ask yourself, is this prediction knowable? Is it knowable? And second, does the person making the prediction have any downside if wrong? With the first one, is it knowable? The corollary to that is, does the person have any outcome on the situation? If someone makes a bold prediction and says, you know, I'm going to walk from here to California, well, they have that within their power to do that. And so that could be, even though it's a bold prediction, it could be within their power to do that. And so they may know that they're going to do that. The second is, this is especially true with politicians, is there's really no downside to making these bold predictions. To come out and say that, you know, we're going to send ourselves to the moon, or Ronald Reagan with his Star Wars missile defense shield. There's really no downside to these because people tend to forget these bold predictions that don't happen, and they remember the ones that do just long enough to encourage people to continue doing them. So we want to talk a little bit about what we would call known knowns. Now, these are things that it's not easy to do, but there are things that can be analyzed, and you can have some general idea of, number one, the global economic outlook. You can look at global economic activity, apply some lessons from past economic cycles to make reasonable assessments what the future is likely to hold. Now, not the next day or the next month or the exact percent, but a general idea. For example, right now, we're generally in a global recession. We're trying to pull ourselves out very slowly. There is a possibility that we go back into recession. There's also a possibility that we don't. This is pretty well known. I mean, we can analyze these factors. Number two is relative value among asset classes. You can look at the yield on Treasury bonds and you can say, okay, I can make myself 2% a year for the next 10 years. Or you can look at the dividend yield for stocks and you can make a decision as to relative value between asset classes. This is something that we do every day and that can be done with some sort of reasonable accuracy over longer periods of time. Number three, this is very difficult, but you can get a general idea of the outlook for an individual company. For example, McDonald's has been doing very well. It continues to grow. Coca-Cola, I don't think is going to go out of business tomorrow. Then you can look at a company like Netflix and you can say, well, they've made some very strategic mistakes here recently, and the outlook for them is a little more uncertain. And so these are things that you can make some sort of educated analysis about. One of the things that you cannot know is the level of a stock market or even the level of a company price years in the future. These are just things that you cannot know. And so when people make predictions about the level of stock market or prices for companies, these are things that you just cannot know at all. So we encourage you when you're listening to these gurus on TV is, number one, think about what do they have to lose if they're wrong. A lot of times it's absolutely nothing. Number two, do they have any impact on the outcome? If they don't, you should take it with a grain of salt. Number three is, are they actually managing any money according to their prediction? And then look at things that you can know and certain things that we would call known unknowns, which is the exact level of a market or stock at any point in the future. Well, that's about all the time we have for today's show. We thank you for joining us, and I hope to see you again next week. For All Things Money, I'm your host, David Blain.
The proceeding was a paid program. The opinions expressed are not necessarily those of WNBU and Inner Banks Media.